Hello everyone, Hashim Ashraf from the Canadian Home Realty. Let's discuss about the Market Watch for July 2025. So basically, Market Watch is like what happened in the month of July. So how the real estate market behaved and what are the numbers. So like we will talk about some of the supporting numbers. So what's happening in the market. Obviously, the number of listings are increasing, but in June we had like 43.3, but in July we had 39,000 listings. So obviously, if you look at the trend from June 2024 up to now, July 2025, so we are hovering each month around like 36, 39, 40, 30, and 12 in December because it's already winter in 2024. Then again in Jan it was 21.5, and February increased to 26. So then again it is hovering from 35 up to 40. Now it's on 39. So relative to the listing, the sales are almost, these are the numbers. Like in the month of July, actually, it actually crossed 15,500. But sales to listing ratio, this is slightly increasing from May onwards. May, June, July. So 30, 34, 36%. It's slightly on a increasing graph. We'll see what happens in the month of August. This is a slide. This is a category decline. The category decline means like it's a in detached, semi-detached towns and condo. Like if you see the numbers, this is the first one is detached. So it is at 1.05 million. So if you look at June 2024, the beginning it was 1.03 million. So obviously there are ups and downs depending upon the season, depending upon the situations. So these are the prices at the moment currently holding for detached, semi-detached, and towns and condos. Next, come to very interesting slide, like top city category contributed for the price decline in July. So if you look at Brampton, it is 14%, Barrie 12, Mississauga 10, Kitchener 7, Oakville 7, Barrie detached is 6, St. Catherine detached is 6, Oshawa detached is 4, Golf detached is 4, Oakville condo are 4. So this is as a city wise contributor, like uh, how the price is coming down as a city wise. Then next slide is like city wise growth. For example, this is like average price in Jan 2025 and June and July. So we are comparing the first month of the year and June to July, month to month. So month on month, the growth is like negative one. Most of the here it is in Clarington, it is 2% plus. It is zero in St. Catharines. Otherwise, almost everything is negative. But on a year over year, if you look at year over year, so minus 14% in Kitchener on the top, then Brampton comes minus 10%, Oakville 7%, then minus 7%, minus 7, minus 7, and it goes down. If you come to Mississauga, it's minus 7, St. Catharines minus 3, Toronto minus 1. So the plus point is here in Ottawa 4% plus, North York 2, Hamilton 2, and Richmond Hill 2, Scarborough 1. So this is like city wise growth, year wise and month over wise. So that this is a clear indication, like if you want to, this is like if you want a really a good deal for the first time home buyers, definitely if you are going to Kitchener and Waterloo region, KWC region, we can get a good deal. So that's what it indicates. Like if you are looking for a buying in GTA and out of GTA, so where to buy? So we can look at these slides and make a decision where we can good deals. So definitely according to the data, because the data doesn't lie. So according to the data, this makes sense to go and buy in Kitchener and Waterloo now because that has got a very good deals available now, even for first time home buyers. Even if you are investors, you have good deals where you can enter because we have come down from 2021 and 2022, the crazy market, and the market has corrected. It has bottomed up. Now I think the interest rate is favoring, it is coming down again. Obviously, the interest rate coming down, and if the trade settles between US and Canada, the number of sales will start increasing and the prices will slightly moving up. I'm not saying that we are going back to 2021 or 2022, but at least we'll get into a positive territory slowly. But if you are really looking for a good deal, a good deal uh, with the supplementary basement or a duplex or a triplex where you can get a cash flow positive units, there are plenty of units are available at the moment in the market. So this is a good time to make that happen. Just looking at this slide, so very important slide, and very very important slide. So based on this slide, you can actually make decision where you need to go and buy the property. So this is basically the total Ontario market snapshot, like how the average price from July 2024 up to July 2025, month over month, how the market is behaving. In total Ontario market, how it is behaving. So if you look at July 2024, it was at 781. So as a peak in October, it has reached to, um, sorry, in the July 2024, it was at 871, and the peak was 893. Now we are at 838. So if you look at the difference from for the last 12 months, the difference may be around 30,000. Okay, so obviously there are corrections happening. There are slightly the prices are coming down, going up, coming down, going up. But like from the peak price, from the 2021 price and 2022 price, the market has already corrected. So these are all the corrected price list for the past 12 months. And the past 12 months, if you see the data, it is hovering in 840 to 890 range. It is hovering between those two range. So it's all depend upon how the interest rate, central bank interest rate will act, and how the US and Canada tariff will take into shape. Depending upon that, the market will slightly start moving up if the job market also uh, like you know mm, supports it. This is an inflation report. Obviously, inflation remains soft in Canada now. So as of June, the Canada inflation sits at 1.9, up slightly from 1.7 in April and May. Meanwhile, core inflation remains steady at 2.7, highlighting persistent underlying price pressure. A key reason, the Bank of Canada has not yet cut the interest rate. So if the Bank of Canada cut the interest rate, obviously, it's good for the housing market. So that's what we are waiting for. But this is a very important slide. This is like from June 2021 up to July 2025, unemployment rate slide. So in July, the unemployment rate remained unchanged at 6.9%, with the minimal shift in job seekers or temporary layoffs. After peaking at 7% in May 2025, the rate is slightly in June and held steady in July. So in June and July, we are at 6.9% unemployment rate. So obviously, this is like there should be a good improvement in the job market. So we need more good jobs, high paying jobs, tech jobs, manufacturing jobs. These has to start coming back to Canada again in order to really have a strong economy. So that's the real fact, because obviously all of a sudden the entire market will not shift unless and until there are a supportive mechanism for the housing market. Next is like next slide is unemployment to job vacancy ratio continue to rise. If you see this slide, this is job vacancies. Like you can see 2021, you see here in 2022, look at the job vacancies. So many jobs in the market. Okay, and unemployment rate to job ratio. Look at the slide. Look at the line here. So we had very good market here. One in 2025, look at what's happening. So over the last 3 months, job vacancies have continued to decline. falling below 500,000. At the same time, the unemployment to job vacancy ratio has sharply risen above 3.3%, indicating a rising unemployment and increased competition for fewer jobs. So this has to something has to happen here. We need more good, high-paying jobs in the market in order to get our economy back on track. This is a simple slide, but this slide talks a lot because without this, like the economy will not move forward. So even like first-time home buyers, investors, for everyone to come back to the market, we need to have a job interest rate cut, and we need to have a strong economy. The US and Canada, the tariff issue should solve. Then definitely we will see the bounce back in the housing market. GDP declined for 2 months. So Canada's GDP in May 2025 posted a mild decline of 0.05 minus percentage, marked the second consecutive monthly contraction after strong momentum in early 2025. Particularly as 0.4% jump in January here, if there was a jump, growth has stalled, reflecting broader economic softness despite stable inflation. So we have a stable inflation. Our inflation is not rising. But only thing is like we need more rate cuts from the Bank of Canada so that more investments and access to fund can be made available so that business people can invest more and create more jobs. This is a mortgage delinquency slide. The mortgage delinquency basically on the rise because of the issues with unemployment and issues with the job market. Some people are unable to pay the mortgages. So because of that, like the mortgage delinquencies are on the rise at the moment. Obviously, it is like if you look at 2025 Q1, it is here like it's overall Canada and Ontario and British Columbia at 0.23, 0.22, and 0.19. Okay, so three important factors coming up now is like September 17th interest rate announcement again by the Bank of Canada. We will have an interest rate announcement. So if they are cutting the interest rate, Bank of Canada, so it is good for the housing market. And October 29 interest rate announcement and monetary policy report uh, in 2025. We have again on October 29th and December 10th interest rate announcement. So these three dates are critical in terms how we are going to move for 2026 market. Now we are in the middle of 2025. So these three key interest rate decision will decide how the 2026 market will behave. Even if we have a cut for September 17th, definitely there will be a momentum starting back in the market, obviously. So this is kind of like, when can we expect a rate cut? So obviously, so it's like inflation trend, near BOC target is 2%, but still slightly sticky. So that supports cut if sustained. GDP growth slowing, signs of mild weakness, encourage earlier cuts. Obviously, if there is a slow market, obviously they have to incentivize the businesses. They have to fund the businesses which are in trouble. Unemployment gradually rising, increased pressure to cut because if employment like uh, is becoming a big issue, then definitely they have to cut so that to incentivize all the companies to make more investments and create jobs. Export performance weak due to US tariff and global slowdown adds urgency for monetary easing. The last one is consumer spending cooling as household tighten budgets, strengthen case for stimulating demand. Next is the forecast from the CREA, that's Canadian Real Estate Association. So this is the forecast. So what are they saying is like CREA forecast home sales to rise to 6.3% and a national average price to increase 3% to 697,929, marking a gradual recovery after 2025 slowdown. So obviously we are in the slowdown, so-called slowdown, but we are almost here now. So, but the Korea is considering 2025 as a slowdown market, but they are projecting 2026 as a better market than 2025. That means the number of sales will start going up. Okay, so that's a good thing. And also, if you look at the Korea's unit sales forecast by province, the especially we are in Ontario. Ontario, it is 2026 annual percentage change is going to be 7.5%. So the total target is going to be 171,000. So this is 7.5 5 percentage of increase. The the National Real Estate Association is projecting, and also even if you look at like province wise, everything is positive. Like 9.5 in British Columbia, 6.8 in Alberta, Saskatchewan is 1.7, Manitoba is 1.8, Quebec is 4.1, Brunswick is 3.3, Nova Scotia is 4.2, and Prince Edward Island is 8.0, and Newfoundland is 1.8. So overall, they are giving a positive uh, number. And also about the that is number of sales. This is average price. Average price in Ontario, they're they're saying it's going to increase by 3%. Same way, if you look at other province like entire Canada, it is like 3%. British Columbia 2.4, Alberta not that much, it's only 0.4 percentage, not much appreciation. Saskatchewan is 2.9, Manitoba 3.5. If anybody is interested in investing in Manitoba, maybe a good market. It's a but Ontario is not bad. Ontario is at 3% because there are a lot of all the immigrants, the highest number of immigrants coming to first, they're coming to Ontario. Quebec 2.5, Brunswick 3.0, Nova Scotia 2.2, Prince Edward Island 1.4, Newfoundland 3.3. So the both the number of sales as well as the price, there is showing positive trend. Next one is like what is happening with the tariff. Like the US imposed 35% tariff on Canada. So this 35 tariff on Canada will impact lumber, seafood, aluminum and steel, potassium fertilizers, and auto parts. So combined this 35 percentage, if you look at the overall trade impact of new US 35% tariff on Canadian export, you look at the export to US from Canada is 75.6 billion automotive parts, aluminum is 14.1 billion, steel and iron is 3.3 billion, lumber is 14.1 billion, seafood 3.8 billion, total $110.9 billion. So if you look at 35%, it's going to be $38.8 billion estimated tariff impact. So definitely the government, both the government has to work something out and like come to a solution here. If this come to a solution, all these industries are protected, the the job market will be good, and overall the economy will be definitely better. So that's the most important thing. Then like if you if you are like looking for the first time home buying or investments in GTA, in Greater Toronto area, even out of Greater Toronto area, our team work like from Niagara to the Oshawa, Pickering, Whitby, Barrie. We work throughout Ontario. We have people in Ottawa. We have team members in Niagara. We have team members in Windsor. So anywhere, if you're looking to buying or selling or investing on a good deals, definitely get in touch with us. All my details, contact number, everything will be given in the description, and you can call me, text me. We can sit and talk about real estate or anything else. Feel free to contact us so that we'll be able to help you in your the first time or investment properties in Ontario. So this is a market snapshot for Ontario. So all these things we already discussed. So in detail, we already discussed these slides. So this is I'm just giving you like the region wise. So the region wise, if you look at the region wise, uh, entire GTA average price trend is at 1.06 million, units sold at 3.5, new listing 17.1. If you look at Peel region, it is like average price trend now at the moment 0.97 million, new listing 3.6, units sold 1.0k. Look at York region, 1.24 is the average price trend, new listing 3.4, units sold 1.0. And the market scenario for Halton is 1.14 billion is the average price, units sold 0.7, new listing is 1.9. So thank you for watching the Market Watch. Feel free to get in touch. My number again is 289 772 6202. Thank you so much.